Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, Multifamily and Marketing. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying the show, I need you to do me a favor. Take a minute and leave us a 5-star rating and review, and don't forget to hit the subscribe button so you don't miss an episode. Now, today we're going to be talking to our man, Matt Faircloth. Matt Faircloth is the president and director of investments for the DeRosa Group. Under Matt's leadership, DeRosa has completed over $30 million in real estate transactions. Now, Matt is also an active contributor to BiggerPockets.com through Facebook Live, teaching webinars, and blogging. He also leads the Mentorship Mondays series on DeRosa's YouTube channel, where he answers weekly real estate investing questions. Let's welcome to the show, Matt Faircloth.
Thank you so much, John, for having me here.
Matt, thank you for coming on. We just saw each other a couple of weeks ago out in New Jersey at Renault Winery for this beautiful transformation mastermind that you and Jay Scott helped put together. So it was great seeing you out there. And one of the things we talked about out there was the current state of the economy. And a lot has obviously changed over the last few weeks here. But what have you been up to and how have things been going for you since we saw each other last?
Well, like a lot of other people, somehow or another, this thing caught me off guard, although we've been talking about this virus since December, right? And it's today's March 24th, right? But we didn't expect, nor did I think most people didn't expect it to hit our economy, and to start mandating nationwide shutdowns like it has, which has really thrown a lot of things in the real estate world through the loop, man. I mean, you've got I believe is the same as you. We're blue collar, C class and B class landlords. We cater to workforce housing. Working America is my tenant. People that earn at or plus or minus around the median income of an area, that's my tenant. That tenant I just described is also sitting at home right now, and they're not at the level of their jobs where they can work from home. These are servers, mechanics, firefighters, policemen, teachers. Some teachers can work from home, but I mean, they're the workforce of this country, right? So when you've got the majority of our tenant base that's not able to work and is not able to work in their vocations, it really brings up a lot of questions marks. And so we've been working hard on addressing, like, okay, well, like I said, today's end of March here. What's April 1 look like? What's May 1 look like? What's June 1 look like? And we typically try, as the executive of the company, I try and think like 5 or 6 steps down the road, but I've had to pull that back, John, in the point where I'm not thinking 6 months out right now. I mean, I do know what I want to do when our country starts climbing out of this. I know exactly what I want to do, but I don't want to think about that now. Right now, I got to think about battening down the hatches and getting us stabilized for the next 3 months. So I've been spending every waking hour that I have thinking about how do I tighten things up for the next 3 months.
So I want to do a little bit of a different episode based on all those things, right? I mean, when we initially got you scheduled to come on the show, I was excited to talk about your YouTube series and everything you do with BP, but obviously a lot has changed over the last couple of weeks. So I actually want to talk a little bit more.
Well, you'll just have to have me back on, John.
Well, I think we will.
You'll just have to do that.
I think we'll have to do that. But I definitely want to talk to you about some of those strategies, right? Because we're in the same boat. And I think a lot of investors right now are in the same boat where we're all concerned. We're trying to figure out how to navigate these waters. It's not yet April 1st. So, we haven't gotten to the point where we are dealing with, tenants who can't pay rent. I know we're trying to proactively get in front of the situation and having conversations with residents as well and understanding what they're going through and being a resource for them to help them get anything that they may need to make life easier for everybody. But as a CEO, as someone who has a business, a company, employees, how are you trying to take advantage of, I shouldn't say take advantage of it, how are you trying to proactively manage your team, your company to navigate through this situation right now?
Absolutely. Well, first of all, do you guys self-manage or do you manage? Do you go third party?
Yeah, so we it's a little interesting. Most of our properties are third party management where we're kind of co-GPs. We do
Hmm.
have properties where we're the lead operators, and on those we have a property management team.
Hmm.
So it's not self-managed, but we're really close to the PM. Like we're basically his biggest client.
Hmm.
So we talk almost every day. So it's very similar to being self-managed.
Okay, got it. Because the reason I was asking is we're all third party, and so I have three property managers that I rely on to carry forward our vision. And so I've been spending a lot of my time upfront, and I recommend this to your listener base. And again, if somebody's listening to this and it's like, hey man, it's not April 1st anymore, it's April 15th, so I already knew what happened was going to I already knew it was going to happen April 1st. Well, it's still relative because I think that our country's not going to just snap out of this thing. I think it's going to take a while. We're not going to be quarantined forever, but it'll take a while for us to recover and to get back to an economic footing, right? So this is all conversation still relative. That said, initially, I think that in times like this, it's important to sit down with our property manager and talk about what protocol and procedures are going to be for the immediate future. Like, how are we going to handle rent collection for the next 15 days? Are we going to give them reprieves? Are we going to offer discounts? Whatever. That's been the first thing, is handling the property management. And then I can get into how we're handling lenders and other stuff that's out there, but we can get to
Yeah.
that in a second. If you want to just talk about property management um, angles, we can go there.
Yeah, let's start there. I mean, so to your point, I mean, April 1st is coming up,
Yep.
and to your point, we'll expedite this episode to get it out there quickly.
Mm-hmm.
But what are the conversations you're having with your property management team and your managers?
Yep. So one property manager is offering a 15% discount for all rents that are paid before April the 5th. Because, I mean, you understand that some people are living somewhat hand to mouth, but most people have at least a little bit of reserve. So if you can incentivize people to put their housing at the top of their priority list for payments, you can have a symbiotic relationship. Say, listen, I understand you're hurt. We'll give you a discount. Just take care of us because we need the money. We need your rent money to pay obligations. We got to keep our wheels turning too. We got to pay our real estate taxes. We got to pay our insurance. We got to pay all the things that we got to pay. And so we need that rent dollar so that we can meet those obligations. So my property manager in Kentucky, in Louisville and Lexington, is doing a 15% discount off of April rent. Other property managers are offering payment plans. So let's say tenant A isn't able to pay all of their April rent. They're able to pay 50%. So initially, this goes, if a tenant calls you up and says, hey, listen, Matt or John, I can't pay my rent. Okay. Well, I understand. And I got this from Brandon's video. I don't know if you watched it, but Brandon Turner put out some really good content on this. And I'll summarize it here. Yeah, obviously, you don't offer this up to tenants until they come to you and ask for help. But if the tenant comes to you and asks for help, say, hey, listen, I'm not going to be able to pay my April rent. Okay, how much can you pay? Right? Because they can pay something, right? All right, how much can you pay? Well, get them to pay what they can pay, so you can keep meeting your obligations on your side, and then ask them to say, okay, what I'm going to do is I'm going to take the remainder, and let's say the rent's $1,000, they're able to give you 50%, so they give you $500. You take that other $500 and you spread it out over a period of time. Now, Brandon's video said spreading it out over 10 months, which is super generous. So it's like, okay, you owe me another $500. I'm going to spread it out over 10 months, right? Over a 10-month period. I think that's great. I think that's generous to do that, and I think that it also shows a win-win symbiotic relationship with tenants. So those are two things that I've seen done. I've also seen my property managers and I are together working on researching incentive programs that are out there. We have quite a bit of commercial tenants. I went and found that the local SBA, the Small Business Administration in the county that those tenants are in, is offering a $15,000 0% interest loan to small businesses. And so we are forwarding that off to all of our commercial tenants, saying, hey, just so you know, not that I need every nickel of this, not that you got to get this loan and pay it all to me, but this should help you keep your boats afloat. Maybe subordinate some payroll, obviously pay your obligations to us and to others too, and help them weather the storm. And we view our tenants as our partners in this thing, is in helping them work their way through this. And if they can honor their obligations to us, we'll continue to honor our obligations to them, and obviously not file eviction or anything like that, or not trying to throw them out in the middle of this craziness. So that's the property management angles that we're doing. How does all that land? What do you think?
Yeah. I mean, that sounds like a great plan, to start, because if you can find ways to keep that relationship solid, where,
Yep.
to your point, even if they can't pay the full amount of rent, if they can pay a portion of that, if you can, for you serving up those solutions as far as the SBA loans that are out there, that's a great way to be a great resource and continue to create a relationship that is, focused on solutions as opposed to being adversarial. I think there are some folks who, are looking at it to say, hey, look, here's the contract, here's the lease you signed. I don't care. April 1, May 1, whatever month, your obligation is to pay me the rent. And I just don't think that's the right approach at this time. This is where you can really make or break, your business as an investor, because if you can find creative solutions to navigate this, it will help you tremendously.
Well,
I'm not sure about
Go ahead. Sorry.
yeah, I'm not sure about where you're at in your properties, but in Hamilton County, where Cincinnati is, in Ohio, actually, I think the entire state, they've shut down all evictions.
Mhm.
So even if you wanted to take a hard stance, you really put yourself in a tough position, because you don't have the authority to actually evict
No,
someone.
you can't
at
do
this
anything.
point.
You got an empty gun, man. You can't do anything with that. What
Yeah.
are you going to take a hard line for, right? And I think that at the end of the day, let's talk about where taking a hard line puts you, right? Regardless of your portfolio, if you take a hard line on tenants, like tenants are, a lot of them don't have a ton of savings. That's okay. I see all their finances. I'm not judging them. There was a point in my life where I had $17 to my name. So I've been broke before. I've had not that much money before. It's okay. And I'm not calling my tenants broke. I'm just saying that at the end of the day, I don't judge them for not having, 15 grand sitting in their savings account. And we shouldn't either. We shouldn't start being holier than thou and saying like, well, you should just save up, or you should have got a better job, or you should have whatever. Well, there's a lot of circumstances that put them where they're at, right? So let's have some empathy, number one. And if you have empathy for a tenant that maybe they only have a little bit in their savings or no savings at all. Maybe they're on a cash economy. They could be. Some of my tenants are, or they're just living on cash. If that's the case, they simply do not have the resources to pay their rent. I mean, these are folks that are relying on their usual vocations to pay them enough to get themselves by each day, right? And if you take away that vocation, they're done. They don't have the savings or anything like that to weather the storm as you and I may, right? And everything like that. So what I suggest is, number one, you take a hard line and start pushing tenants out for not paying, you're going to lose about half your tenant base. Done. Like you're going to go to 50% occupancy. And you don't want to do that, number one, because it's going to be hard to find new tenants. Releasing in this environment is going to be tough, where people can't go outside. If we go on 100% lockdown in the state that you're in, tenants can't come look at your apartment anyway. So you might as well keep who you got in there. Not for nothing, So that's number one. Number two is, you said you can't file evictions. So you really don't really have any ramifications to push back on them. And I want to come out of this thing strong. I don't want to come out of this storm at 50% occupancy, limping my way through, So all that said, it doesn't make sense to take the hard line. But that leads me to my next thing is, we're already talking to our lenders, So as much as talking to our property managers, we're going to work things out. We're going to offer payment plans. We're going to offer incentives. We're going to research government programs that can help them. Yes. So all that means is we're going to do our best to maintain revenue and to keep the property's revenue up. That's number one. The other side, I've already reached out to every lender I deal with and told them that we are going to be, this is unprecedented. There is no underwriting model that I could have considered that had pandemic in there. There was no pandemic protocol for my property. There was recession numbers, there was that kind of thing, but there's nothing in there that says 50% of your tenant population can't pay their entire full burden rent. Nothing. You follow? Right.
Yeah.
So we went to our banks and said, but I think that we're going to have a problem. And so we've gone to our banks and asked them for a 3-month rent reprieve. I'm sorry, 3-month mortgage reprieve, right? Now, you might say, well, if you're going to ask for a mortgage reprieve, why can't you offer your tenants a rent reprieve? Good question. We still have other obligations. I can't go to the power company and ask them for a power reprieve and the real estate tax, my county's real estate tax agency, and ask them for a tax reprieve, or my insurance company ask them for a tax reprieve. At the end of the day, all those entities, there are still folks that still need money outside of my mortgage company. So getting a mortgage reprieve will probably save me 40% of my operating costs for my apartment building. Because that's why I can't directly say, okay, rent's zero for everybody because my bank just said my mortgage is zero. I can't do that, but I can offer something. It at least gives me a lot more room that I can pass something through to tenants. So that's our next move with lenders.
And Matt, so when you have that conversation with the lenders, what was the response, right? I mean, you asked for the 3-month reprieve on the mortgage. What was the response?
Well, it's funny. My big bridge lenders were, so we totally get it. No problem. We understand. And the reason for that is, I think you probably monitor the news like I do. You saw Fannie and Freddie just came down, that Fannie and Freddie are going to be offering exactly what I just said. Right. And I got a really good mortgage broker. My mortgage broker, he knew. He said, listen, just so you know, this is last week he told me this. Fannie and Freddie are coming out with this. And every bridge lender's job is to get your building renovated so that you can bridge. That's what I call it, a bridge, because you're standing over here, you want to get over here. That's what the bridge loan is. And over here that you want to get to is a Fannie and Freddie mortgage. They want to get you over to there, right? So it makes sense that bridge lenders are going to follow suit with Fannie and Freddie. Now, the news just hit yesterday that Fannie and Freddie was doing this. So I don't know. You don't know. They don't know. Somebody listened to this on April 15th. They know, but this thing's changing daily on what's going to happen. And so we went to our lenders and asked them for this. Now, they have not. I've only gotten, we deal with 7 mortgage lenders. I've gotten responses from 3. I've had conversations with 2. The 2 that I've talked to said, we'll let you know. The 3 that I got direct responses from said, yes, we're working on something. We'll get right back to you. So they're working on it. There's closed door conversations going on with lenders right now on this, because they don't want the properties back. And this is an unprecedented circumstance, Yeah. So who's to say what it's going to look like? I can tell you what I'm offering.
Let me ask you this. What, for our listeners who are thinking about taking a similar action, what's the downside in approaching your lender right now to ask for some sort of assistance or forbearance on the payments?
Yeah, well, that's the thing, is you're getting ahead of the curve. You're going to your lender and saying, hey, man, I think I'm going to have a problem before April 1st even comes up. The lender's going to be like, hey, why are you even talking about this? You don't know. Like, call me April 15th and tell me what April rents look like, and then we can talk, right? I want to get ahead of it, and I want to know what's going to happen. I want to know what my options are before I need those options. Because I don't want to go in at the 11th hour and say, I got a problem, I can't pay my mortgage. Mm-hmm. I don't want to do that last second, which is probably what they really don't want me to do that either, right? But the downside is that you are exposing a need before you need it. I talked to one of the landlord friends, and he was like, you shouldn't do that because he thinks it's showing weakness to the bank. And the bank's going to be like, well, you should have some reserves. You just, this is your problem, not ours. And that, right. That's an angle that the bank could take on this. So that's the downside is the bank could view you as a weaker borrower. The bottom line is, though, the bank doesn't want this back. The banks are on their heels too in seeing this whole thing untangle. And so I think that it behooves banks to help us.
I think too, when you look at the situation, like we have a deal where the bank actually made us put $50,000. Essentially, it's not even in reserves that we can touch; it's in their possession. Yep. So they have $50K of our money. So I know we initially talked about going to the bank and asking for the forbearance, but it's like, yeah, but they're holding $50K of our money. So I'm sure the response is going to be, if you have any problems, we'll just pull the money out of this $50K and we'll go from there. So
let them do it, right?
Yeah. So
how much is the monthly payment? Do you know how much monthly payment is?
It's not it's nowhere near that. It's like 5K or something, 6K,
Yeah,
something like that.
if I were in that circumstance, which I am in one of my properties, I am in
Yeah.
that, like they've got like a heavy interest reserve, more than that, right? Like 6 figures. And they just baked it into the refinance. When I refinanced the property, they just threw it in there saying, okay, well, we're going to make this part of refi proceeds. We're going to just take this money and we're going to put it over here in a lockbox. Well, okay, let's open the lockbox, you know? That is a conversation you can have if your bank has an interest reserve. I mean, these are times that interest reserves are designed for, you know. So that would be the conversation that
and
I
to
would
your
have.
point, it's still, I mean, listen, to your point, I think there's a concern about being weak or coming across weak when you're talking to the lender.
So
But
what?
I think you have to, well, I think part of that is just in how you manage the conversation, right? To your point, if you're being proactive, having a conversation with your lender saying, hey, listen, we're not certain what April 1st is going to look like, but I want to talk to you about this because there may be some challenges, and just having a conversation. You can always figure out your options and pivot and go from there. But having that conversation to know what options are on the table, what you have at your disposal, that puts you in power. And that allows you to make the right decision. So even using my situation there, for us, that may be one option we take. And if that's the case, that may allow me to be liquid for other things. Like you said, there's still a bunch of other bills we have to pay. So
Real
if I
estate
can tell the bank,
taxes,
if I tell the bank, go ahead, you pull your money out of that interest account, and then I will use the funds that we do have on hand to cover other expenses to get through, that gives me at least a couple of different levers that I can pull versus if I were to pay everything to
just gives you
the
some
bank.
breathing room, you know.
Yeah,
I mean, gives you some breathing room. So that's what we're trying to negotiate is, and I may not even need it because I got a few properties that I think are going to be just fine. We might see like I don't know, maybe 10-15% delinquency increase on a few of my properties, but I got some properties that are in some let's just call them emerging markets where people are really hand to mouth in these markets. We thought the markets were going to turn, they haven't turned yet, you know. So we've got some properties in markets like that, and I'm like, man, I don't know. I mean, what these folks are going to be able to do and everything like that. And I really need to help them, and I can't. The worst help I can, like the worst thing I could do for them as well, is to not pay my mortgage, or not have enough cash to pay my mortgage and have the property end up getting taken back by the bank while they're living there. Right? It's their home, right? You know, I mean, I heard of that. You probably remember that during the 2008, 2009, 2010 downturn during the crash. Banks were going back and repoing small apartment buildings with people living in them, you know? And the people living there, I was like, what do I do? You know, and the banks don't know how to run something like that. You know, and that's, it was a mess. And I think the banks hopefully learn from that and don't want that circumstance to happen again. It's just better off for the people that live there, for the tenants, and for us, if we can get a little bit of help from our bank to weather the storm. Because again, there's doomsday scenarios out there about how this thing's going to go, and that we're all going to go back to living around campfires and living in caves and stuff like that. And the whole global thing's going to collapse, and we're all going to use Bitcoin to buy gallons of milk and all that, right? There's that scenario, but let's pretend for a second that doomsday scenario doesn't happen. And that kind of stuff only happens in the movies. And what's really going to happen is we're going to climb out of this in a period of, like, let's say 2 to 6 months, that we become stabilized. And the economy is going to be down, unemployment will be a lot higher, and but we'll be out, and we'll be able to reposition ourselves in the economy, reposition our properties, and take care of our tenants, and come out a lot stronger than we would if we just let the bottom fall out of our properties.
So let's transition to talk about that, right?
Sure.
So let's assume, let's just fast forward to the summertime. Let's assume that the coronavirus, COVID-19, is no longer the threat that it is today. So
that we become Wuhan, because Wuhan's already opening back up, right?
Exactly. So
Wuhan pulled the shutter down switch middle of January, and they're coming out 2 months after that. Right?
There you go. So let's fast forward to that time, right? What moves should investors be looking at? And you can speak for yourself, but as you think about your business, how are you trying to position yourself for the future to kind of come out of this pandemic so you're ready to move forward?
Cool. Well, first of all, I'm not a shark, and I've seen some nastiness on Facebook, man. I mean, going on around the social media, like, this is what I've been waiting for. I'm licking my chops, and I'm going to go and buy all these multifamily that are over leveraged and stuff like that. Man, I don't wish harm upon my upon my fellow real estate investor. Man, we all had the balls to quit our job and do this thing full time and to try and build a business and build wealth for our families. The least thing I want to do is hope that one of my cohorts goes under so I can buy their property, man. I'm not a shark. And I think it's kind of bad mojo to be trying to shark it like that. Now, here's what I do think. I think a lot of the people that are out there, and this isn't sharkhood, this is just realism. I think that a lot of people that are out there trying to sell their properties are going to, unfortunately, and I feel for them, are going to have some occupancy issues. They're probably going to do the same thing I'm going to do and go to their banks, and maybe they're going to go to Fannie and Freddie and maybe get some help or whatever. But there are some folks, there are older populations that have been landlording for a while. I'm talking about like the late 60s, mid 70s, the baby boomer population that's been landlording for a while. I think are likely going to say, you know what, this is enough of this craziness, man. And they're probably right. You know, maybe this is enough for them to say, okay, let me throw up my hands. We are going to be pursuing, hopefully, those properties at a reasonable number. I'm not trying to steal anything. I'm just trying to get a better price and not like a 5.2 cap on these properties, like something that makes sense. And here's craziness, John. Maybe it cash flows the day I buy it. And it might not make 30% cash on cash return. That's okay. I don't need that, but I think that's shark thinking. If I can buy a property and it makes 8 to 10% cash on cash return year one, and without me having a big value add and increase the rent $300 a month and do all this crazy equation and everything like that to make the deal even pencil out, right? Maybe that'll be enough for me. And I think it will be. And I'm talking, maybe cap rates going from 5 to 7. And if that happens, then I think that it's not going to be a feeding frenzy, because I think a lot of folks are going to say, you know what, I need to go bat down my hatches and build my financial house and, just go back to maybe pull back a little bit. And I think that when people are still in pullback mode, but things are starting to get a little more rosy, that's where we're going to go after deals. And I think that like the, say, June, July, August window is when we can capture some stuff that just makes sense. Not stolen from anybody, just something that makes sense. So that's that's my model. I get a deal under contract right now in South Carolina. We're gonna hold off on it. I'm hoping that the seller is willing to wait two months. I'm not closing on that right now. Yeah, right. I don't want that hot potato. Like I don't. I don't want that April rent roll. Who knows what that's going to look like? When
were you scheduled to close?
Well, it was July 1, right?
Okay.
And June 1. The June 1 close. We're in the middle of DD. And it's a $1.5 million raise. And I'm not even doing the raise right now because I'm like, first of all, I think equity's on the sidelines. I think equity's going to look at this thing and it's like, hey man, I got to see what's going to happen next, right? A lot of my doctors and cardiologists and folks that invest with us, or just anybody that invests with us, they're all kind of they're stuck at home too. So they're not sure what their future is going to look like either. And so me going around asking people to cut us a check to invest in this deal, no way. And they're going to obviously ask the questions that I would. How is this economy going to affect that apartment building? Like, and I would say, I have no idea. Like I don't know. And no one does. And neither does a seller or not does anybody. So I need to know a little more about what things are going to look like. So we're going to ask that seller for a 2-month, push back the closing for 2 months or 2-month due diligence extension. So
yeah, I think too, for anyone who's in that boat, right? You've got a deal under contract, you're excited to close. This is some really sound advice, right? Because there's two sides to it. One is the immediate, basically the presence, right? So what happens with April rents, May? What are you actually buying and what are you taking over? Because typically when you acquire a new property, you change property management team, you're going to have some turnover just from people who don't want to be there and see what's going to happen. They think that they're no longer going to be able to afford to live there, right? Mm-hmm. So you're going to have that organically. As you're talking about the current situation, even closing is questionable because your lenders, depending on what lender you look for, they are changing their lending requirements every day now.
Man, I heard of lenders backing out of deals last week, man. You probably heard of this too.
I heard it too.
Like at the table, that's cold-blooded. Like stuff's about to close and everybody's got their pens in their hair and the lender's like, I'm not sure about this.
I saw someone made a post that said they closed on a property like I think late last week and the lender wired the funds And I don't know if it was later that day or the next day, but they called and said, hey, can you wire us the funds back? And they were like, go kick rocks. Absolutely not. I'm not going to wire the funds back. But to your
No.
point, even like at the moment, like just the certainty of closing has to be troubling. And I think if you're
I love
going through this,
the lender had the cojones to ask for that. You
to
know, like,
ask for the money
hey,
back.
do you
Hey,
know? I think I was kidding.
that
I might
$10
have
million
hit the
I gave you
button too
last week.
soon. Can I? Was that a big deal? Was it like a $10 million
I don't
deal?
know. I don't know. He was just, that
Okay.
was the only post. I didn't go into more detail, but it was
Okay.
funny. I was
I've
like,
heard
wow.
I've heard a large apartment building deal, and I can't imagine what happens with the seller and the buyer and all that, and the EMD and like
Well,
how
think
this
about
whole
it
thing
too,
goes
Matt.
under. Yeah.
How many groups are going in right now? 100,000 hard for these larger deals right now, right? 100,000 hard day one, $250,000 hard day one,
Depends
50,000
on
day
whose
one,
seminar they went to, right?
right? But how many groups are doing that? And look at the
Yeah.
situation you could be in if your lender is like, I'm not doing that deal. Like you could have very easily just threw out
Yeah, but
six figures.
the guru I told me to go in with money hard like that, you know, and they told me that everything would be okay if I did that, right? No, yeah, everything looks real good in up economy, and money hard day one looks real good in up economy. But I've been around long enough to know, and I've seen all kinds of craziness come up. You know, I mean, I've gone through due diligence on a property, and the seller's like, "What underground tank? What are you talking about?" You know, like that one right there, the one that's I'm pointing to, that underground tank, that one, and like, oh, I had no idea. You know, yeah, okay. Now, you could get into a pissing match. Pardon my French. You get into a you know what match with regards to things like that. If you go with money hard, I would never do money hard day one ever, because I've seen too many things change in this economy, and unfortunately, we've been in a really not unfortunate, fortunate for everybody. God bless that we've been in a great economy for the last 9 years, right? And a lot of pivots like this have not happened, but I have seen pivots like this happen overnight several times in my career. And so that's why, like, yeah, man. I mean, things happen quick, like out of nowhere,
Yeah. So I mean, to that point, I mean, if you're looking at doing deals right now, I think the biggest thing is just really stepping back a little bit, making sure you really understand where your lender stands with everything, and just knowing that that can change. So you better have 2 or 3 backup options, even with your lender, because they may change their requirements any day. And then the other thing too is, how are you going to address these questions that Matt's bringing up, right? You're talking about economic vacancy. So what did you underwrite for? How long are we going to be into this situation? When are Americans going to go back to work? So you have to really understand your economic vacancy numbers and what the projection is there. And then also anticipating, if you're working with investors, anticipate the questions and feedback you're going to get. People are going to ask about the economy. They may be worried about their own money now, right? So it's their own money, and how risky or how comfortable do they feel investing $100,000 into a deal today? But then the other side of that is the deal itself and how you plan on mitigating the risk and managing it. So just keep those things in mind if you are looking to do deals right now. And then I think if you go further out, a lot of this will be mitigated. I think the air will clear a little bit, where you'll have a better sense of how to structure the deal and what the new playing field looks like. But as of right now, there's still a lot of uncertainty in what the market's going to look like 2, 3, 4 months from now.
No, we don't know. We really don't. I mean, I'll tell you, this is something you and I talked about at the mastermind. We're going to be working on raising more of a blended fund, and like rising multifamily has been a great place to be. And I still believe in it. I still believe America. I mean, as much as like Amazon's changed the game for retail, and, the WeWork movement has changed the game for office space, there's not much that's going to change the game for housing outside of Airbnb, and unless we all just start living like nomads and popping from house to house and everything like that. As long as most people have a general homestead, their multifamily and housing is going to be a place that we're going to call our main home. That said, I believe moving forward, diversification is going to be the name of the game, and it's going to be what makes sense to investors. And so we're gonna be raising a diversified fund, and not a fund that's only in multifamily. It's going to be in multifamily, and we're going to pass through depreciation from multifamily. But we're also going to get into other asset classes like distressed notes, hard money loans, mobile home parks and self-storage, by investing with A-plus operators and negotiating, prime positions with them that benefit us and benefit our investors. because I think that it's not that I don't think multifamily is going to be on the rise, but I don't think it's going to be on the uptick like it was. It just can't. It can't keep doing what it's been doing. But I think that that other asset classes are going to be perhaps even more attractive right now with multifamily as a foundation too. So that's what I'm going to be doing. You're probably not going to see me roll out with lots of 80-20 splits plus a big pref and telling investors they're going to get a 15 to 18% IRR on the back end. You can go to CrowdStreet to see those numbers if you want them, but that's not, we're not CrowdStreet. We're not Realty Mogul that we're going to put pie in the sky numbers out there for people to invest in. We're going to put real solid returns for investors to get. And it's going to be probably less IRR, but it's going to be way more stable because it's going to be diversified and it's going to be just something that's going to be a little bit across the board. So that's what we're going to be focusing on, is really putting our investors first, and putting them in big value add deals are going to be good for me, but not as good for them. And so I'm not going to do that.
Yeah, I think it's interesting to read kind of the way people are looking to pivot right now as well. So, and you and I, to the point. Well, I want to say this. To be clear, you and I were talking about that prior to any of this stuff. That has nothing to do with the coronavirus. Of just looking at business and saying, "Hey, multifamily has been hot. How else do you pivot and grow?" And I think you're spot on with it. We talked a little bit about that. What I'm hearing is, there are folks who are looking to do kind of things that they've been doing and continue to do that and kind of wait and see. But I think the thing with real estate as a whole is, if you can have a couple of strategies, 2 to 3, it's almost like the stock market. I'm not a big stock guy, but stocks and bonds kind of work together, right?
Yeah.
And in a way, notes and maybe multifamily could work somewhat similarly, where, notes could be a great advantageous opportunity to get into now, right? If you could get into notes today or other things that tend to do well when the economy is down, that's a great counterbalance to multifamily. So if you were to create a fund or something that allows you to invest in both of these asset classes, I think that provides a lot of diversification for investors. The other piece for us is, just really trying to stay true to our business, and our business is not multifamily. I think that's where we probably differ from most people. Our business is helping investors, make solid returns through real estate.
There you go.
That doesn't necessarily have to be through multifamily. It's the thing that we love. It's the thing that's tried and true. And we like it for a lot of the same reasons you said. But we're open to things that make sense. It's interesting. As we're sitting here, I got a text, and there's a good friend who he basically has a ton of Airbnb properties in Chicago. And
I feel for Airbnb owners right now, man.
Well, and here's the deal. So he has some himself, but he's been doing like they call it Airbnb arbitrage, right? Where he basically leases an apartment from an owner, and then he puts it on Airbnb, furnishes it, and rents it on Airbnb, and he basically pays the owner, with whatever the rent is that they've agreed upon, and he pockets the difference. Well, this guy's had everyone cancel on him, and he has no clue how he's going to pay April 1st rents across all these different properties, to the point where he's probably now, talking to attorneys, because I don't know if he disclosed this or not. But, and this is not just him, I've heard this from a few different people who are going through this right now. When you don't own the property, because you have this lease that you are responsible for. And if you've done this across the board and you have hundreds of units where you've just been eating off the fat, you've been exposed, and there's a lot to lose here. So when we talk about Airbnb, you also mentioned WeWork, right? So a lot of these kind of game changers that have come in, part of the issue with them right now is with people not able to go out and work and convene. The business model is just shot. I mean, completely crumbled. And who knows if they're going to come back? I mean, WeWork may not survive this, so we're not sure what's going to happen with these companies at this point.
No, who knows? Airbnb, Airbnb as a company is going to make it. But the owners doing arbitrage, I don't know. I feel for them. My thought on Airbnb was it was already an emerging still. I think Airbnb and short-term rentals was still in the oven per se, meaning like it wasn't quite done cooking yet. as an economy. And I don't think that from a reg standpoint, and all that, we didn't really have everything in place. As you know, some towns were litigating against it, and we were still figuring out how Airbnb played into our global economy. The problem is that because of technology and because of this digital world we live in, Airbnb was able to become a multi-billion-dollar industry before the government could catch up with it. It's like the government was just sitting on the front porch and somebody just ran past them and they said, "Hey, wait a minute, let me get out of my chair here and go run them down." You know, it's same with Uber, same with a lot of other companies like that they just took off so before the government could really get their head around it, right? And so I think that this shakeout, I think, unfortunately, is gonna sting a lot of Airbnb and STR owners. The folks that own the real estate direct, I think they're probably going to try and pivot and just lease, and maybe until things come back around, or maybe they got the cash to hold their breath. The folks that are doing arbitrage, I feel for, because they're going to have to keep. They don't own anything. They can't go back and refinance. There's no bank they can go to and say, "Hey, can we renegotiate?" They could potentially go to the landlords and try and renegotiate. But I think you're going to see a lot of these arbitrage folks just walk and just say, "No, come get it, find me, like sue me," and they're just going to give these properties back to these owners. So I don't know. I think that's where that's going to go. I think I'm curious how it will affect the industry long term, and how it will help form and mature the short term. I think that this coronavirus thing is going to be probably what helps mature the Airbnb industry or the STR industry fully. And puts more regs around it and puts more checks and balances in place. Because right now it's the wild, wild west, and I think that that's all good in an up economy. The wild, wild west is great for everybody in an up economy. In a down economy, you can see right through it like Swiss cheese, and you can see like, oh, geez, this is this is all a shell game here. Is that? I hope that all makes sense.
Yeah, absolutely. So Matt, I do want to talk about, we talked a little about investors and the fund, but
yeah,
what
that's just what we're going to do. That's what we're going to do.
Yeah.
That's what everybody else should have to do, but yeah.
Yeah, please, everyone, don't run out and start a fund. That's not what we're talking about.
You can. There's plenty of room, but.
So Matt, one of the questions that I've gotten over the last few days in particular is in response to investors and just really how we're proactively trying to engage, not so much with our current investors, but, you and I are both marketing guys. You've got your YouTube channel. We've got our podcast. So we're constantly trying to connect with other investors. How do you see the next, let's call it 6 to 8 weeks? I mean, are you still pushing out stuff? Are you still planning on trying to bring in new investors? And what conversations are you looking to have as you look to grow your investor database?
Well, okay. I mean, if new investors show up and want to talk right now and given everything going on, yeah, man, I'll gladly talk to them. But we're not aggressively pushing, I'm not waving my hands in the air being like, "Hey, do you want to invest in multifamily?" Like I said, I'm not confident that I've raised a lot more than this. I'm not pounding my chest, but 1.5 million is not an enormous raise for my company. So we could put that together pretty quickly, that South Carolina deal, if I wanted to raise it. But I don't believe that equity is going to be clamoring over itself to get to a deal right now. And that's what I need I need people that are excited to get into my deals, not people I got to pull over the fence kicking and screaming into my deal, So I think that we're not soliciting for investors right now. We're not looking for it. What I'm trying to do is to relate to and maintain my current investor database, and my student database too. So then that's just through open conversation. We're doing an open webinar on Thursday. I put it on Facebook. Liz put it on Facebook too. We put it out to our newsletter. We're just going to have an open webinar. Hey, whoever wants to come out, we're going to talk about our strategies for investing in 2020, given this changing times that we're in. So we're with regards to our strategy with our investors, it's really just about conversation. This is what we're doing, and this is what we don't know, and this is what we're waiting on information on. This is what we do know, and this is what I can act on, right? That's how we're handling our investor base, is lots of conversation, but not much, if any, solicitation.
Yeah, and I think, but you're not stopping the wheel though, correct?
No, my YouTube's you can't. I think from a marketing perspective, it's very. I would be very cautious stopping the wheel, because it takes a lot as a marketing guy too. It takes a lot to get the wheel moving again, right? And so it's important. I think that in times like this, people want to hear from you. They maybe don't want to hear from you as much. They kind of look at you as like a little as like a little bit of a nuisance. Like, oh, that guy again. During when things are high, when things are low, they want encouragement. They want people in their face. They want people to talk about like, hey, this is how we're doing. This is what we're up to. Do you want to join this conference call to talk about real estate or whatever? I think people are seeking communities more now, and conversations more now than they would be just a few weeks ago. And that. So yeah, I'm going to keep YouTube going. We broadcast once every 2 weeks. Twice a week. We're going to keep broadcasting, and I'm going to keep. I'm probably going to increase my conversations. I'm probably going to do more webinars, more outreach, more push, to try and console people and to make sure people know that we're trying to get ahead of this thing as a company. We're not just hunkered down, you know?
And I think that's brilliant. And we're planning on doing something very similar. And I would say, as a marketer, for anyone listening, if for whatever reason, if marketing is an important component of your business, which pretty much for everyone it should be, I think that's smart advice. You know, you want to be active and present in these times. This is not the time to go dark and go quiet and go stick your head in the sand, because people want to hear from you. Sometimes they may be tough conversations, but it's
you
better
get branded as the wrong thing. You'll get branded as the good time guy or gal when if the only time that you're in front of your investors or in front of your market is when things are going great. The truly savvy syndicator and investment manager is the one that's over communicating during downtimes and under communicating during uptimes. Because if you're over communicating during uptimes, what you're doing is bragging. Okay. If you just tell people, hey, listen, we exceeded returns. We made extra money, more money than we thought. We had it, we had a great quarter. Here you go. Here's your cash. Move on to the next one. That's all we did. We outperformed on a few properties in February, and we just sent out one communication. Here you go. We didn't just pound our chest and anything like that. But now we're sending out communications almost every week to investors and doing live webinars with them and everything like that. When times are down, I think it's the opposite of what you should do if you start to under communicate during downtime. This is when they want to hear from you now.
Love it. Hey, Matt, great information there. And I love that point. Now is the time to be communicating. And if there's a theme for this episode, it's communication, right? Yes. Communicate with your residents, communicate with your lender, communicate with your property manager, communicate with your investors. Those are really some of the top
and
things.
Have positive communications.
Absolutely.
Positive, solution-oriented. This is what we're going to do level conversations, because I can tell you the alternative to having positive, solution-oriented conversations is to have, negative conversations with yourself, right? To not talk to people and to sit and read the media and just read what people think are going to happen and worry about it, right? That doesn't sound like fun, So sitting by myself and worrying, or out talking about solutions with anybody that'll talk to me, I'll take the latter, thanks. I mean, I think it's better to talk about solutions with your investors, with your property managers, and try and figure this thing out, even though this may be the biggest thing I'll ever have to figure out in my career. And I've had to figure out some crazy stuff, but this may be the biggest thing that I'll have to navigate. And that's okay. I try not to think about that part of it too much. I got to just put one foot in front of the other and move forward through it, and try and maintain a positive attitude through all of it.
No, I love it. So listen, Matt, we normally go through our bullseye round, but I want to save that for the next episode we end up doing together. That way, when we're talking about you and your background and all the marketing stuff, it kind of makes more sense.
To be continued, huh?
Yeah, okay. we'll put to be continued on the bullseye round. But in closing, I want you to talk to our listeners about just top line thoughts to keep that positive mentality, that positive mindset, whether it be through the current situation we're working on or really anything. What is the one thing you do, or some top tips of things that you do to make sure you've got the right mentality to be a great leader for your team?
Okay, got it. So I remind myself what I've been through already. I'm 44 years old. I've been through all kinds of stuff. This is not the first bump in the road. And even if you're 24 years old, you have had speed bumps in your life. You have had things that you have had to surmount. We've all had problems. And what's amazing is we're all still living and breathing, and we got through the problem. Maybe you lost some money. Maybe you lost something that was near and dear to you. Maybe you got some battle scars, and that's okay, but you made it through it. And what I would submit to you is you are going to make it through this. This too shall pass. And I tell myself through everything that I've gotten into, this too shall pass. I've had almost $1 million stolen from me before, and I got through it. I'm still working that out. That was 2 years ago, and I'm still working out some of the bad things that have happened in my business, but I never give up. I never keep trying to push forward, because you got to remember that failure is simply quitting, right? If you realize that as long as you keep trying, you keep succeeding, and as long as you don't accept failure as I'm not quitting, I'm not stopping, I'm going to keep maybe tweaking and adjusting and changing gears and trying this or trying that, but I'm not going to quit, because that means I failed. And that's the only way that you fail, is if you try again. That's not failure. That's just dusting yourself up and try again, right? And so those two things. Remember, you've been through this before. And just have a simple mantra of not giving up. If you just make a promise to yourself that no matter what, hell or high water, they're going to have to run me down in the street for me to quit. And they're going to have to tie me up and chain me somewhere for me to stop pushing. If you commit to those two things, right, then I promise you'll have more of a positive attitude. And also, third thing, promise yourself, make a commitment to yourself that you will avoid or minimize negative thinking. Mostly negative conversations outward. I have plenty of negative conversations with myself in my head, but I have them out of my mouth. Right. I try and stop it from going from my head to my mouth, the negative conversations, and I allow myself to have them here, or at least to have a little bit of a pity party, for a little bit, but then I shake it off and get over it and go back to thinking positive again and speaking positive. So don't give up. Positive thinking. Remember, you've been here before.
No, I love it. Those are great tips there, Matt. I appreciate you sharing that. Listen, none of us know how the next month or two are going to shake out, but we are all in this together. And, some great advice from you, and I appreciate the conversation for our listeners. And again, I'll ask anyone, Matt and I know both of us are fairly open when it comes to conversations. Matt has his YouTube series, I think, is it Mondays when you do the Ask a Question?
I do Mentorship Monday. They can email me at helpme@DeRosaGroup.com, helpme@DeRosaGroup.com. I'd love to talk to you later on the marketing, when we get back to regular programming, back to your marketing show, about how that's been a symbiotic win-win relationship with our listeners and offering up them access to me like that. So helpme@DeRosaGroup.com. They can email us, and they can just go to my website at DeRosaGroup.com, 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 and they can hear everything that we have to offer.
Love it, Matt. Listen, thank you again for coming on Target Market Insights, the Multifamily and Marketing Podcast. We will definitely be in touch with you. Hopefully we can pull off this Midwest Real Estate Networking Summit and we can see you there, but we will see how the next couple of weeks shake out. Talk to you again.
When you have it, I'll be there. All right, cool.
Sounds good. Take care.
Take care.